Hi, and welcome to Business Advisory and Tax Tips. Today, I will be talking to you about post-election stimulus update and Biden tax policy impact on small businesses. But first, I'm Michelle Burke, coming to you live from Annapolis, Maryland. Many of you know that after 30 years in the corporate tax world, I went out on my own and created Health and Taxes in January. There are only two things certain in life: death and taxes. I'm here to help you flip that to health and taxes. I come to you live every Wednesday at 5 p.m. Eastern to bring you an update on the stimulus, what's going on, and usually bring an extra tax or business advice tip to help you out. So you can watch me here live on Facebook, or also for those catching me live on YouTube. Thanks for joining in. If you need to catch the replay, I have posted it below. Please check it out on my YouTube channel, Health and Taxes. Please comment, subscribe, and share if you find value. And I appreciate all your support. So first, let's talk about the stimulus update. We all know that the senators came back from their election campaigns and back from their vacations on Monday, and they stated that their goal was to get busy on the stimulus and that it was their number one priority. That said, Mitch McConnell, who continues to be the Senate Majority Leader, stated that he wants a much smaller stimulus package because of the October jobs report that came in with 6.9% unemployment. He states that the economy is doing better, and therefore it's not in need of a larger stimulus package. So remember, prior to the election, the Senate had gotten up to a $1.9 trillion package. As of today, they're at a $650 billion package. So that's where they stand today. The House announced today that they're at a $2.4 trillion package. So we've furthered the gap in just 1 week's time between the two parties. President-elect Biden is stating that he was really encouraging Congress and the Senate to get a stimulus out and get the economy going from that perspective. However, we do know that with the Senate that there are two open seats. Those are in Georgia. They're up for a runoff election vote that will happen January 5th. So those are critical regardless of which side of the political fence you sit. Those are very critical because it will determine if one party or the other has control of the Senate. So that's all I have on an update on a stimulus. I mean, again, there's talk that it's a priority. However, the discussions today didn't leave me with a feeling of encouragement because there seems to be a further divide where things sit now. However, I could be proven wrong. So let's move on. Let's talk about Biden tax policy, how that might impact small business in particular. So just as a reminder, December 2017, an act known as the Tax Cuts and Jobs Act was passed, and this was an overall tax burden reduction, a reduction of tax rates for businesses, whether you're structured as a corporation or whether you're a pass-through entity, as well as individuals, trusts, and estates. However, keep in mind that the reduction to many of the corporate provisions are permanent, while many of the reductions to the individual and estates are set to expire at the end of 2025. So that's if nothing were to happen, some of those provisions will expire. And if nothing were to happen with new rates being proposed and then voted on, the corporate rates will remain. So just as a reminder, the corporate tax rates are currently at a 21% tax rate. That's down from the 35% prior to that tax act. And the Biden tax policy, oh my gosh, did you see that? I had a little gnat on my lip. Almost, we might have to capture that. Anyway, it didn't stay. It flew away immediately, so that's a good thing. Anyway, the Biden policy is proposing to increase that to 28%. Now, like I'm saying, that would require a tax policy that goes through the House, goes through the Senate, and goes through the presidency. So depending on, who's controlling the Senate, there may or may not be any tax changes anytime soon. So we'll have to see. The other item is with corporate tax rates is the Biden proposal has a 15% minimum tax on book income for companies reporting U.S. net income greater than $100 million, but owe no U.S. taxes. So what I really want to highlight here is that it's greater than $100 million of book income. And therefore, we're not talking about the small business here. So I just want to point that out. Overall, the Biden campaign stated that the Tax Act that came out in 2017 was very skewed to large corporations and wealthy individuals, and that the plan is to retool this so that these taxpayers are paying their fair share, and hence that proposal for both the minimum tax and the 28% corporate rate. So, Julie, thanks for your comment. Thanks for filling us in with these changing info. You are welcome. I hope a lot of you listening out there in my tax base find this helpful. Another item I want to point out is offshoring and re-domestication of U.S. jobs. So there is a proposal to create advanceable Made in America credit of 10% applicable to qualifying expenses, such as those related to returning production to the United States, revitalizing existing closed or closing manufacturing facilities, incrementally increasing wages paid to U.S. manufacturing workers, and retooling facilities to advance manufacturing competitiveness and unemployment. So some opportunities there for small businesses to enter into those manufacturing fields. Another reminder is depreciation. So remember, capital expenditures right now under the Tax Act, there's 100% immediate expensing of qualified expenses. So you just write it off, and that goes through 2022. After that, it gets phased out down to 20% in 2026. So it's a phased approach going down to 20% in 2026. The Biden proposal doesn't have any specifics on modifying that. However, with that minimum tax that I was talking about for the larger corporations, it might impact the ability to expense. There are a lot of proposals for alternative energy. So restore and make permanent the solar investment tax credit, expand the deduction for emissions reducing investments, increase incentives for energy efficient technologies, encourage development of low carbon manufacturing section through tax credits and subsidies for businesses to upgrade equipment and processes. So these are opportunities for small businesses. Many of you know that I used to work for a solar company that took advantage of a lot of these ITC credits. It was a small company at that time, and it had an opportunity to really grow because of the solar in ITC investment tax credits. Incentives for domestic manufacturing, again, establish a manufacturing community tax credits for 5 years to incentivize qualified investments in communities affected by mass job losses. Again, an opportunity for a small business to get in there and start in that manufacturing section and take advantage of some of those credits. Payroll taxes. So many of you know that Social Security and Medicare make up payroll taxes. Social Security is 12.4%, and that's split between the employer and the employee. If you're a small business, you're probably paying both because you are the employer and the employee. That's capped in 2020 at $137,700. Medicare is at 2.9%, again, equally split between employer and employee. And if you're a small business, again, you're paying both of those. And there's no cap on that. An S-Corp distribution is not subject to Social Security or Medicare tax. That is because their wages are, and anything coming out of their excess profits as a distribution from the earnings is not, because that's a flow-through entity, right? The Biden proposal is wanting to expand Social Security tax to apply to wages $400,000 or higher. So that 12.4% that we were talking about, that was capped at 137. It'll pick back up when you hit $400,000. So there's kind of this donut hole that you get this benefit from 137 up to 400,000, then it picks up again. So I just want to point that out, that it's 400,000. It's understood or thought that that's meant per individual, but it might be per household. So a spouse and so a married couple, right? But it's not clear. So there's some speculation how that'll fall out. Employer provided childcare. There's a proposal to create a new tax credit for employers who construct an on-site childcare facility. Again, probably not something for a small business. However, if small businesses set aside a facility or an area within their business, we'll have to see if that might be something that could qualify. Flipping over to individual taxes, a reminder that the ordinary tax rates, the top rate is 37%. That's set to expire in 2025, and then it'll go back up to its 39.6% prior to that. Keep in mind that the Joe Biden would like to go ahead and restore that top rate to 39.6 with the new proposal versus waiting for it to expire. Maybe make a proposal to increase that rate sooner than later. Capital gains and dividends, there's been a lot of talk about that. Right now, capital gains are at a 20% for capital gains and qualified dividends. There's some additional rates on net investment income over certain caps. The Biden proposal has to tax long-term capital gains and dividends at ordinary income rates. So that would be the 39.6% if the rate was increased, or the 37% if the rate's not increased, but this were to pass. For those having taxable income greater than $1 million. So it's not going to impact the lower income families, and it's not going to impact flow through business for the smaller businesses. Pass-through income. So right now, pass-through income is taxed at an individual rate. And then the Tax Act created this 20% deduction under Section 199A for the domestic business profits. That is set to expire in 2025. The Biden policy would propose to phase that section out and have it continue to apply if a filer had income greater than 400,000. So that could impact a small business, not really a startup business, but maybe an established business that has earnings in that level of 400,000. Itemized deductions. The proposal here is unclear on that state and local tax. Remember, there's a $10,000 cap. If you're itemizing as an individual, you can only deduct $10,000 in your itemization of property tax, local tax, state tax, etc. There's been a lot of pushback on that. A lot of states have been trying to come up with different rules, have passed different legislation to kind of circumvent that or get a benefit on the state side or find ways to do that differently. So we don't really know where that stands. And then there's a proposal that all itemized deductions would be capped at 28% tax rate. And then finally, what I want to mention, there's other proposals, but I just want to mention that there are several credits that would be proposed. Increased child tax credit, child and dependent care tax credit, family caregiving incentives, and their continuation and an increase of earned income tax credit to elderly people that are still working. So these are all proposed policy or proposed policy under the Biden, President-elect Biden. When he comes into the presidency in February, he will be required to put together a detailed proposal. The Treasury is also required to come out with a detailed proposal. So we'll have a lot more insight then. This just gives you an idea of things to be thinking about as we approach year end. So I hope you found this helpful. And please comment or make any questions or comments below. I'm happy to follow up with you and answer those. And again, thank you so much for joining me. I hope you found this valuable. And if you did find it valuable, please like, comment, share, and subscribe to my YouTube channel. It would be much appreciated. So thank you so much. I will be back with you Wednesday at 5 p.m. Eastern for our next update. So until then, have a good night. Thank you.